Hello and welcome to episode 27 of the Gold, Goats, and Guns podcast. My name is Tom Luongo. It is Thursday, August 24th, 2017. It's been a while. It's been almost 9 days since I did one of these, so it's time to get right to it. We've got a lot to talk about. On Monday, President Trump had his announcement of what he was going to do to change our policy in the war in Afghanistan. And I have really mixed feelings about this. I think I know what he's trying to achieve. At the same time as I don't trust it at all, because I don't trust the situation that exists within the White House. With the departure of Steve Bannon, with the now near isolation of Trump, and the fallout from events at Charlottesville and whatnot, and other places, and the ratcheting up of domestic political tension here in the United States at home, Trump is in very, very dangerous waters. And I wrote an article over the weekend for Halsey News on Monday, called The Revolution Will Be Televised. And I feel very strongly that we're on the verge of something like that. I also feel at the same time that Trump is trying to secure himself a future, and there may be something seriously afoot between himself, California Congressman Dana Rohrabacher, WikiLeaks owner and founder Julian Assange, and Steve Bannon. But I don't know. I'd like to believe this. I'd like to believe that they're setting up the deep state and the Democrats and everybody for a massive reversal relative to pardoning Assange and putting the Russiagate stuff to bed and all of this stuff. But I don't know. It's pretty obvious in the first couple of weeks that new Chief of Staff John Kelly is really clamping down on not only on what information leaks out of the White House, but what information Trump is actually getting. And that scares me. None of these guys, McMaster, Kelly, and even to a lesser extent Mattis, are our friends. I'm not going to say that again. These guys are all globalists. McMaster refuses to believe in any way, manner, shape, or form that Islam is the problem. Trump is now surrounded by Israeli firsters, globalists, and pretty much nobody who got him to where he is. So, with that said, do you have long or short odds in your head that he's going to be able to do anything to drain the swamp? And then when you analyze his speech relative to the statements by his Secretary of State, Rex Tillerson, you have to believe that there's significant disconnect between the two based on what Trump is being fed and what Tillerson actually believes should be done. This is my worst case read. In print, I have given you my best case read. The articles I've written for both Halsey and Russia Insider over the last couple of weeks about North Korea, about the stuff with Bannon and Julian Assange. All of that is your best case scenario. Your worst case scenario is that this is over. Next couple of weeks are going to tell us where we are. It's just that simple. And right now, from an investment perspective, markets aren't going to do anything until the central bankers have had their say at Jackson Hole on Friday. So, ain't nothing going to happen in the gold market between now and Friday. ain't nothing going to happen in the silver market between now and Friday. I'll show you the charts in a minute. I'll show you just how little volatility there is after Friday's failed breakout in both the metals, which I wrote about for Seeking Alpha and my subscribers over at Stock Shocks and Rocks. So that's where we are. Now, on the other hand, we've had some volatility in the crypto market. Looks like Bitcoin has won the fight between the renegade mining crew behind Bitcoin Cash, who were attempting to, it looks like to me, they were attempting to manipulate the price of one up, Bitcoin Cash, and the price of Bitcoin down in order to try and create a miners' revolt and make a few $1 billion for themselves. I don't think it's working. And I'll show you the chart. And the charts, the action in Bitcoin this week, back above 4,200 today, tells me that attempt at market manipulation has failed. At the same time, after a couple of weeks worth of consolidation, we've had multiple moves by Ethereum above the 310 level, and we're comfortably trading in the 320s today. And looks like that should continue to push higher in the coming weeks. So I'll show you those charts in just a minute. But I am really quite worried about what Trump thinks he's going to accomplish in Afghanistan. My best case scenario is that he wants to oust ISIS, get the Taliban, Pakistan, and the Kabul government to start talking to each other, put pressure on China through India, which is really frickin' dumb. Really frickin' dumb. Declare victory and leave by the end of his first term. We'll see if he's allowed to do that. The truth of the matter is that we are entrenched in Afghanistan at a level that no one publicly wants to admit. And if we back out of Central Asia completely, the petrodollar will collapse. The petro-yuan, through the gold trade, will take over, which is going to happen anyway, by the way. Because there's no way to stop Gazprom from accepting yuan for their gas for the next 30 years, starting early next year. So all of these moves by Trump on a foreign policy basis to shore up LNG exports and coal exports and all of this stupid, it's really just a stupid mercantilism. And they eat it up in the heartland, but it's really dumb. It's good with domestic politics, but at the end of the day, it's really dumb. That's not what he should be focusing on. And in some respects, I know Martin Armstrong said that he cheered Steve Bannon leaving the White House, which is because Bannon is stuck in a 19th century model in terms of where our comparative advantages are. Our comparative advantages are not in producing coal and liquefied natural gas. Our comparative advantages are in our technology, or in our IP, in all of those things. Finance, all of that stuff. That's where our economic advantages are. And to kind of go backwards is, well, dumb. Really dumb. So, I don't know. It's part of the reason why I continue to be very bullish on Russia in the long run. Putin has showed himself to be incredibly flexible and incredibly smart in terms of embracing new technology. I saw something today about Yandex beginning to just destroy Google's market share in that region, in Russia and the CIS states, the Commonwealth of Independent States, those countries, Belarus, Kyrgyzstan, that area of the world, Ukraine, and the Cyrillic-speaking, Cyrillic-using countries. And that's only the beginning. The embracing of the blockchain at multiple levels to rapidly improve the Russian economy and the Russian governmental structures and contract handling and all of that stuff it's going to revolutionize that country. It's going to be for Russia, think about it this way. If you're looking at it, for the Russian financial system and capital handling, internal capital handling system, which is really where Russia is still backwards relative to the first world, relative to places like Germany and the United States and England and whatnot. That's what has to improve. And the blockchain represents for Russia and for other countries the same kind of leapfrog in technology that cell phones did for Africa, for communications technology. I mean, in Africa, they're not running copper all over Africa in order to communicate. They're putting up cell towers because cell towers are cheaper and cell phones are cheaper, and running copper everywhere is expensive, and it ties you to localities and all of that stuff. It's like floating natural gas, floating LNG versus land-based LNG. It's all of those. That's the kind of, it gives you flexibility of geography. It gives you the flexibility to change to rapidly adopt and shift to new markets quickly. And cell phones are revolutionizing. Without cell phones, you're not going to. Africa doesn't have to go. Most of Africa doesn't have to go through the painful process of building out a copper wire network to handle voice traffic. They've got cell phones. Got satellite. Stuff's already there. All the stuff we already paid for. And the same thing's going to happen for the Russians. And, and not just the Russians, but other emerging markets with the blockchain. The quicker they adopt blockchain technology in order to do all their back office work. This is why I'm bullish on the cryptos. This is why I'm bullish on Russia and the cryptos. And from a geopolitical standpoint, why I'm bearish on the United States. So, all right, let's get you to the charts, and then I'll get you out of here. All right, so let's look at gold. Gold and silver on Friday had an opportunity to break out above 1,300 on gold and like 1,730 on silver, 1,724 on silver. Neither of those levels held, and we're getting a close at 1,290 last week, or 1,292 or whatever it was in gold. Set up just an ugly coin flip of a week, and really so far this week we're 4 days into it, and look at the lack of volatility. See, these weeks are normal volatility, $35, $40, and now we've been trading in a $15 range all week. Now, when you get this kind of lack of volatility in gold, you get this kind of inside bar in gold. This is an inside bar where we haven't yet broken either the previous high or the previous low during this bar, so this bar is tracing as an inside bar, right? And outside bars where you break one of them, and engulfing bars where you break both of them. And let's see if I can show you an engulfing bar on this chart. I don't even see one. Just 90% of bars, or about 85% of bars, are outside bars. And in gold, about 10% of them are inside bars, and about 5% of them are engulfing bars. And you'll note that all the bars that we have here, we don't even see an engulfing bar. So actually, we do. I'm sorry. There's one right here. Look at that. Here I am, being an idiot. We got one inside bar, and we got one engulfing bar. And this engulfing bar here is what set up this chance for a breakout above 1306 or 1300, and we got a high of almost 1307, but we didn't close on it. It happened during the European market on Friday morning, and the minute the New York market opened, the selling started. It did not stop until New York options expired at 4 o'clock with the close, meaning there was a lot of people who were offside and were going to go bankrupt on options expiration on Friday, on GLD options expiration on Friday, and a lot of people needed to be, a lot of things needed to be stuffed back into place, because that's what happens on OE. It just does, especially in the gold market, especially during a bear market in gold. So, no surprise that we've got this, after that happened, and we've got this kind of, what they're trying to trace here now is an inside bar in order to crush this momentum of this 6-7 week uptrend. All right. And then get a correction back down into the 1250s or so. And that's what I would suggest is the issue. Because right now, if this is the way we end the week, well, probabilities are really high tomorrow after after Yellen and Drahi open their pie holes, that we're going to be looking at a possibility here of a big breakdown, especially if Yellen comes out tomorrow and is dovish, doesn't mention anything about balance sheet normalization starting next month. Well, guess what? Gold's going to sell off to 1250. It might even sell off to 1250 tomorrow. is the kind of thing you have to be worried about. Now, I wouldn't put a price. I wouldn't trade that event. I would wait until after. I would wait to see what happens, because better to wait and get confirmation than to be wrong-footed. Unless you want to take a lead this afternoon, I wouldn't do so. Okay. So the same things here. We got the same thing happening in silver. We got a 6-week uptrend in silver, and then we had a breakout above this 1724 level. We got a move above that. I got a nice violation last week, but we can't follow it through because of the huge failed breakout on Friday. We got almost no movement at all this week, and either this is a continuation, and we're just getting a little bit of consolidation before the central bankers disappoint the gold bears for the first time ever, and say something nice at Jackson Hole. Hasn't happened yet. Why should it happen now? To push the price towards $18. If Trump is going to economic war with China, China is actively accumulating in the gold market, and Russia and China are actively trying to undercut the petrodollar through the ruble yuan gold oil trade, which is what they're doing. Right? The Chinese are buying oil from the Russians with yuan, which the Russians are then turning around, as opposed to buying Chinese denominated debt, they're turning around on the Shanghai exchange and buying gold with it. You're effectively creating a petro yuan system. Neatly avoids all of that all of those shenanigans that happen over in Saudi Arabia. All right, so that's what's going on. And if Trump's going to economic war with China and China's accumulating, what's he going to do? Raise the price of gold? So that China has to accumulate at higher prices? That's exactly what China wants anyway. Higher gold prices. That's what the Russians want. Their foreign exchange reserves go through the roof. It only makes their debt work. It only makes their debt easier for them to sell. It only makes everything easier for them. So obviously not. This is what I mean when I say that the central banks are caught between a rock and a hard place. This is what I'm talking about. Well, that's one of the aspects of what I'm talking about. Okay, so let's look at Ethereum real quick. So last week we had this inside bar here. Now this is what's interesting about this. Depending on the market, an inside bar means different things. We definitely had an inside bar here relative to this bar. So if this is your base bar, then this one we didn't break either the previous high or low. And so now what? Well, here we are, very low volatility week. The probability on this close was it was really high that we would break this low, which I think we did. I have to go and look at the data. So this is actually technically an engulfing bar. So we got to, but the probability here was like 90% that we would break this low, 270, 229. It's like, when it's that easy on a market as volatile as Ethereum, it's really not saying much. What's more important here is that 270 area. Oh no, sorry, I'm looking at the bar all wrong. Jesus Christ. That we did not even come close. Let's back up and then start this analysis again, because that was a mistake. I don't know, for whatever reason I thought this is badly drawn bar. But this the close last week at around 290 left us with a relatively high probability that we could break to the upside versus break to the downside. It was, for the most part, a coin flip if you really look at it. But by breaking to the upside above 311.80, we now have no probability of going back to 270. This 270 to 310 area had really held for about the previous 9 or 10 trading days. As if I showed you the daily chart, you'd see it clear as day. And we've now got this break above 320. So as long as we close this week on Sunday above 312, then Ethereum is really off to the races. And most likely we're going to get that. We're trading today around 323, 325. Bitcoin's back above 4,200. Its volatility is shot, and I'm going to show you that in just a second. And so you can see the volatility that we had here in Bitcoin, where we hit this high of 4,500 early last week. Then we got sell-off and more sell-off, right? So over the course of like 4 days, we went from 4,500 to 3,600. But now we're back to 4,200. What is that telling you? It's telling you that this was, and this was obvious. The Bitcoin Cash guys were out there actively trying to manipulate the market. They even said they were actively trying to manipulate the market, and it's failed. And that was having bit of an effect on the Ethereum market and the other cryptos because, at the end of the day, people weren't sure what was going to happen. So there was a lot of selling going on. There was a lot of consolidation in some markets, selling in other markets. Some markets did really well. Like Litecoin broke above $50 today. Monero broke out enormous. It doubled overnight because of new volume of being listed on another exchange over in Korea, and adding tremendous liquidity to the coin. But those were exceptions rather than the rule. If you look at the rule, a lot of cryptos were mildly selling off over time, and that's fine. Actually, that kind of sell off is actually absolutely necessary in this market. So this correction here in Ethereum was incredibly constructive, and I think we're getting close to the opportunity here to move higher, and I think we're going to see a challenge of 400 before we see another sell-off. Okay. Then again, this is the Bitcoin chart. We got this volatility here, but there's been any kind of weird reversal signal happening. They tried to engineer one. It failed. This is why it's important. I wouldn't even look at the daily chart for Bitcoin. I'd start looking at nothing but the weekly and monthly charts at this point, because that's all that really matters. The monthly chart for Bitcoin is insane. So, it's insanity. Right now, I think that the weekly chart is what you want to be looking at. As long as you don't see a reversal in any way on the weekly chart, I wouldn't worry about it too much. Prices are going higher. They can be incredibly volatile. They may move at $500 or $1,000 over the course of 2 days, but so what? Sunday to Sunday, as long as we don't get any reversal signals, you're pretty much good to go. All right, so that's what I've got for you this week. I'll try and get one of these done over the weekend as well, to talk about the implications of Jackson Hole and to see where we are there. Also, we've got other things coming up that I'm interested in, and from a domestic policy perspective. So I may be back as early as Sunday night or Monday. So, all right, you guys take care. You have a good weekend. Talk soon. Keep your stick on the ice. Thanks for watching. Leave a like if you did. Join my Patreon to get exclusive blog posts and access to the new Gold, Goats, and Guns newsletter. The link's below.